go.
Let's do it.
Let's bloody rip it. Right, money miners. Fuck, she's all go out of the big dogs today. Earnings season continuing.
Oh yeah, mate. This is
Trav's new favourite company is getting a good little segment here. S32. Some pretty critical wording coming out of BHP's announcement today. It wasn't their actual earnings results. It was just
exceptional.
Yeah.
They're on a media mission.
Exceptional stuff.
No, exceptional items.
A media mission to just, guide as much as possible that this is going to happen and maybe put some pressure on the government at the same time, Matty. Oh.
Yeah, mate. We've finally got a bit of quantifiable data about covalent lithium with Wesfarmers' announcements today.
Very interesting.
Not shitloads, but a bit. Mate, what do we got? Whitehaven, Capstone Copper. A bit of a rapid fire at the end about Kin, PNX, Ora Banda, True North. Mate, she's all go.
Plenty happening.
Mate, have a look at this, what I've just whipped up on the whiteboard.
What have you got for us?
On the whiteboard?
Check this out.
You got neat handwriting, Matty.
Now, I thought rather than splitting two great companies up, I'm going to merge them together. It's a bit of money of mine advertisement M&A, you'd say.
A merger of equals.
And just a bit of it's not like a SWOT analysis, just the good old school tick and cross, boys.
Yep.
Now, we're talking about SMEC, the electrical gurus, SMEC Power and Technology, and the foundation sponsor, Seamus Murphy from Anytime Exploration. Now, I thought I'd see if they pass a bit of a due diligence on my behalf, see if they pass the test to keep them going.
This is your DD checklist.
Question number one.
Yep.
Are they run by a real good bloke?
How'd they go?
SMEC, Marty Law, tick. Absolute legend, and of course, Anytime Exploration, Seamus Murphy. Tick. Owned by the founder. We know we love a founder-led business.
We sure do.
Marty Law, still at the helm, founder, current manager, director, bloody top dog, tick. Seamus Murphy, tick. Founder-led, love it.
Love it.
Do they provide a shit service? That's a cross.
No, they don't.
SMEC, absolute industry leaders in electrical for underground and plenty more, which I'll talk about. Anytime Exploration. Just being able to go anywhere, anytime and do anything. That sounds like a bloody sensational service. So definitely not shit service. So another cross there.
One will save your mine money and the other one will, bloody help you find stuff to turn into a mine.
Find stuff to help you then have an excuse to save money later. Yep. Bloody perfect. Mate, are they experts in a niche industry? Well,
yes.
SMEC Power and Technology, absolute. Electricity is their thing. Big tick. Mate, Seamus Murphy, any exploration. Mate, it's not manufacturing. It's not mining. It's exploration. Absolute gurus. 2 ticks there.
They get multiple ticks each there because they've got they're doing multiple things in their niche. They're doing heaps of stuff.
Oh, and we'll get to that because have they shown growth in response to industry demands? SMEC Power and Technology. Mate, the foundation was just, HV cables, electrical boxes, fan starter boxes, substations, but due to this decarbonisation way we're going, mate, vent on demand, variable speed secondary ventilation, saving money, saving carbon, keeping the carbon down here and not up there. Mate, absolutely industry leaders in the electrical, the new electrical frontier for underground mining, mate. And tunnelling. Those vent on demand variable speed drives are in the Sydney tunnels as well. Plus gold mines around here. So massive tick there. And Seamus Murphy, Anytime Exploration, now expanding the services to a
resource reporting.
A full geological consultation offering as well, in addition to bloody core cutting, soil sampling, people, equipment. Mate, Polarises to get around to your bloody drill site. Mate, tick. Now the big one.
All you need is a tenement and he does the rest.
Exactly. He might even put the ore there for you if you're lucky. Mate.
And we can sort the tenement out as well.
Oh, yeah. Look, don't forget MMTS, which, mate, that'd be ticks everywhere. Last one. Are they vetted by money of mine?
The big one.
The DD has been done. we've done the DD, so Seamus can help you do your DD.
We haven't just
diamond drilling.
done the DD. We've just showed them our DD checklist.
There we go. Tick for SMEC Power and Technology, and tick for any time exploration vetted by Money and Mine. Now, if that's not a bloody pretty much a federal stamp of approval, I don't know what is, boys.
You don't even need to read up about them. You just need to pick up the phone.
Just pick up the phone. Emails are in the show notes. Flick them a message. Great supporters of the show. Great companies. Love them. Right. Now, shout out to we had just a bulk amount of GCs rock up to the office yesterday by person and some via mail.
Record, mate. Record.
So all it takes, our best social media engagement of the last month was Ali GC chucking a picture of Trav next to an empty wine rack. And Jesus Christ, didn't the punters come calling? What a pack of legends. Mate, first shout out. Check out this. Blue Poles, Margaret River. Isn't that beautiful? Tim Markwell from the Blue Poles Winery in Margaret River. Mate, himself and, here's a good story, himself and Mark Gifford were a couple of geos working at Anaconda Nickel in 2001 and obviously saw the writing on the wall there and got a side gig going and started a winery as well down at Marks. Bloody beautiful drop of vino, Blue Pulse. Have a look at that and still going today.
Love it,
mate, we also had Tommy Wisdom and Mark Offenberg drop off some, here we go, Plantagenet. Sure.
I think you've got that.
Oh, no, I missed it. I missed an N. It's Plantagent.
Plantation, yeah.
Plantagent, Shiraz and Shardy. Mate,
Yeah.
it's
Good to see the Shardy get it right.
Look at that, mate. I'll tell you what, it's going against I'm really working hard here not to try and get shit-faced during the episode with all this wine in the house. And, mate, don't forget our great friend Spinner, who dropped off another case of dingo yesterday and a keg of dingo.
Did you get a keg?
For me, I got a keg.
Oh, Matty, that's awesome.
I think I've got to pay him for it. But there's big news coming out of my house about dingo. Stay tuned, money miners. Some big news, big life changes, and I'm going to deliver it to the money miners in tribute of Spinner Brennan from Dingo.
I'm intrigued, Manny.
Sort your life out, get a dingo up you, everyone. That's all you need to know.
Shout out to Headley too, who dropped off some beer.
Oh, Headley, Headers with it.
So we had four bloody cartons of wine or beer or whatever dropped off.
Mate, if anyone wants to come say good day after 5, and even if we're not here, hook into a beer. We've got shitloads here. Right, speaking of companies that don't like their workers to drink beer at all, BHP. How good are they? They love them they love letting them have long cribs, but yeah, all the 4 mid-strengths all come out of these guys. So, mate, pre-half year results.
We're going to talk about all the companies that you.
That's why I left mining, because you can only have 4 mid-strengths at night because bloody all these big companies made it law. Right, pre-half year results, not the exceptional items, you'd say, but not the good kind of exceptional. They announced 2 things. We're going to go right through the impairment of the carrying value of their WA nickel assets and increase to the position for the Samarco Dam failure, which is their JV with Vale from that horrific disaster from 2015. So
it's a long time ago.
Yeah, so let's start on the nickel assets, boys.
Yeah, we'll focus on the nickel assets today. So WA Nickel has, they've recently added West Musgrave into that. So that's all the mines, the concentrators, the smelters, everything they've got here. And by the way, West Musgrave, they gave an update, was 21% constructed, but yeah, a bit more on that one later. So they recognise, like you said, Matty, an impairment charge of US $2.5 billion after tax. That's, that marks down the value on the balance sheet of the WA Nickel assets. They said they are looking to reduce operating costs and reviewing capital plans for Nickel West and West Musgrave. So not sounding too positive, but not a big surprise there. They, you can sort of infer that profitability will get a massive whack on the income statement when the half-year results actually come out soon.
Yeah, I don't think profitability will be the term to use in their nickel side.
No, not for nickel side, but
be any.
No, but it will shelter a bit on the other parts of the business which are making money when that comes out. So the carrying value, this is pretty interesting. It now has a carrying value of negative US $300 million. That's due to the rehab and closure costs of US $900 million. And
So that's saying they value all of their nickel, including the downstream and everything, at US $600 million. But if you add on those rehab and liability, it goes to negative carrying value.
yeah, you can infer that. That's right. So as you'd also expect, they drew down the nickel price assumptions across all of their projects going forward. And as a bit of a double whammy, the capital cost assumptions increased because of inflation that we've seen across the industry recently. So getting into how the business actually performed in the first half year, the nickel business lost US $200 million. So that's, in Aussie dollar terms, $50 million a month in losses. And bearing in mind that the nickel price was around 20,000 US dollars around the half year time when the financial year started, it's now 16,000 US dollars a tonne. You could estimate, I think quite fairly, that the business is losing upward of 60 million Aussie dollars per month currently. So naturally, because of all of this, BHP is considering, but they haven't yet said that they'll put Nickel West, the business in its entirety, into care and maintenance. So
and that's what did we say? It's about 2,000 jobs plus?
2.5 was the number I saw.
Yeah,
So,
wow.
I mean, that sort of leads to the elephant in the room, guys. And we didn't really speak too much about this before we filmed today, but there's a lot of strong wording here without a real decision being made. It feels a bit like a threat, or perhaps, a wait and see approach. They're putting the ball in the government's court. They're signalling to the government as well as to the market that they're going to shut everything down, and perhaps, making politicians out there think, hey, they could be serious. There's a lot of jobs at stake here. Maybe we do, if we are going to do something, need to do it now. So
I'd say they emailed that announcement directly to Roger Cook on Market Open, I'd say.
Mate,
I'd say they've been having some close calls, and these job losses weigh heavily on whichever politician happens to be in power at the time that the commodity price comes off.
It almost seems synchronised there, because there's this article today, and I'm reading WA Premier Roger Cook on Thursday, which is today. On Thursday, said he was deeply concerned by BHP's announcement and flagged the government was preparing to offer nickel miners royalty relief. It's understood that while the state government prepares to offer some form of royalty relief, it also expects the federal government to provide separate, longer-term support to the industry.
I don't think they're paying 60 million in royalties a month, are they?
I think we're. It makes a difference to you pay a royalty off production, right? It's not like it's on profit.
Off the top line, but
yeah. But you're right. 60 million is probably like royalty relief probably doesn't make it profitable. You're right.
But then and when we say royalty relief, they still have to pay them later. They have to pay it back later. It's just kicking them down the road a bit.
I hope so.
Depending on how it's structured.
It does say preparing
usually.
some form of long-term support to the industry, so you never know.
Yeah, you don't have to pay it until 50 years.
We could see some silly policies, but
yeah. Mate, look, there is some positives in BHP. Obviously, they're making shite loads out of iron ore. But look, I found this in their quarterly. Check out this drill hole intersection for the Olympic Dam Deeps ore body. 442, this is the sort of the true width one, 442 metres at 1.38% copper and 350 ppm uranium. Mate, this thing looks like it's continuous all the way from bloody 1 to 2 kilometres. So, and it's 2 kilometres strike. So 2 kilometres by 400 odd metres thick. That is what we call fucking huge.
That's the metric term.
and that's like, I think on the scale of what that is compared to like that, and that's probably nothing compared to what Olympic Dam is up the top. Like that mine is, that's just nothing compared to Olympic Dam. That thing is huge. So, mate, no shortage of copper and uranium for BHP at Olympic Dam. So if those thematics come true,
when we spoke about it at, I think it was the most recent quarterly, there was more pages dedicated to this, Maddie, than anything else. It was half the report was dedicated to the exploration work at Olympic Dam. So
bloody phenomenal ore body.
I would just touch on Nickel West there. Every bloody few years it feels like BHP flags the idea of selling Nickel West, and then they don't end up selling it. And now like the whole market looks pretty fucked. What would happen? What would it look like? How would the optics be received if they, get some royalty relief there, and then that maybe makes the maths a little bit better, and they're just able to sell it based on that. I mean, that would look pretty freaking shit, wouldn't it? So, but I wonder if BHP are actively trying to sell Nickel West, because if I was BHP, I'd be trying to sell Nickel West. why do I want to hold that, So if they were to sell it, who would they potentially even sell it to? I can't think of many parties that would be putting their hand up.
I can think of one.
Who's that?
That'd be mad enough to do it.
Yeah. Wyloo?
Twiggy.
Yeah.
Like in terms of someone that is set on making nickel work, and that with that much capital and disregard for the price right now, that it's probably the only one that you would think.
I can think of one other one, and that's the Saudi Sovereign Wealth Fund, because they invested, I think it was a 10% interest in Vale's base metals business, which is basically shit high-cost nickel and other stuff.
Oh, mate, money ain't a problem for them. I remember one of the soccer players that was going over there.
Cristiano.
Oh, no, there was another one that was bloody, I saw his contract like shitloads of money, but then 500, I think it was equivalent to $500,000 US or Aussie, per social media post that promoted Saudi Arabia. No joke.
Oh, mental. Yeah.
Mate.
Yeah. It'd be fascinating to see if FIRB would give Saudi Arabia approval if that were to come to it.
Mate, BHP's lobbying is going to get a bloody royalty. I'm sure they can lobby the government to let them sell to Saudi Arabia too. So
I wouldn't be as confident. We'll see.
Jeez, that's going to be some good articles coming out of that. Righto, Trav, mate, South 32's half-year results, mate, and more importantly, the FID decision for Hermosa, the Arizona-based metals project. Mate, take it away. We're going to interrupt you regularly so you don't hyperventilate.
Please do. But, I might explode.
Educate me, young sir.
So, Matty, the money miners would know I've been eagerly awaiting South 32's half-year results, given the discussions we've had in the past week on the potty, and those results...
This commenced in the last month, like your obsession with South 32.
My knowledge of this business from zero has was a low base, but I'm now so interested. But the results dropped today, and gee whiz, there's some talking points here. There's 3 talking points I want to get to. Number 1, FID to develop Hermosa's Taylor deposit, despite shit financial metrics, in my opinion. Number 2, negative cash flow and rising net debt. And number 3, paying a minuscule dividend still, but stopping the share buyback.
All righty, why don't we start with the cash flow and the debt position? I think that's something we touched on in the past when speaking about S32.
It's what we always go to first when looking at any result is cash, change in cash flow. And free cash flow from operations for the half year to 31 December, negative US $477 million. Now, really interestingly, 276 of that they attribute to a change in working capital, which I'll touch on later. But let's just try and figure out which of their operations actually made money. I've pulled up this chart. I had to dig for it, but this is EBIT by operation. And look at this, right? In the first half of 2024, there's really only 2 of their operations there that actually made money, really contributed to the EBIT. That is Cannington, your old stomping ground, Matty, and Illawarra Met Coal. So I find that pretty interesting because, one of them is producing silver and lead, and the other one's New South Wales coking coal. So I don't think either of those are commodities for a low carbon future like South 32 are very keen to talk about all the time. But, it's pretty horrible operating cash flow, and it has implications on South 32's gearing. Remember in our conversations in the last week, the number one thing for South 32 in their capital allocation framework is maintaining investment grade credit rating. And we see in the results today that South 32's net debt has grown to US $1.1 billion. That's the highest it's been, for the company who's historically had net cash for 90% of the last decade. What's more is that management admitted that number will keep growing before it gets better. On the call, we heard them say that they expect it to peak as high as US $1.5 billion net debt, but they're more comfortable with it at the $1 billion mark. And if you're thinking what I'm thinking, surely there's a bit of pressure on their investment grade credit rating that's so important to them, right? Apparently not, because it does say in their docs there, our current credit ratings were reaffirmed by S&P Global Ratings and Moody's, respectively, during the first half of 2024 in the results. Now, Sandy, I'm going to say her name wrong here, Sandy Sibanela took a question on the credit ratings in the call itself, and I thought it'd be useful just to play her response, fellas.
Specifically to the kind of metrics we look at, they're the fairly standard metrics as contemplated by Moody's and S&P, who provide our ratings. So the kind of cash flow to net debt type considerations. And we continue to monitor those and have obviously completed a comprehensive funding assessment for the project. To Graham's point, I think the key element for us is that we've always said, and we'll continue to say, we will return cash when we have it. And given the weaker margins and the growth in our net debt position, we thought it was prudent to pause the buyback and have obviously taken the decision to cancel it.
And as you can hear there, the lack of free cash flow generation has meant that in order to keep their credit rating in that investment grade, they've had to halt distributions to shareholders effectively. I mean, this is the second talking point I want to get to. Buyback stop, dividend effectively gone. I'm going to admit I'm actually pretty happy with management's decision in this department. Like I'd voiced in the lead up to today that I was worried South32 might keep distributing to shareholders via just levering up, adding more debt.
We talked about that yesterday.
We did.
With
Evolution.
Evolution, yeah.
They've shown some prudence here, which is to be commended. They they announced a dividend of 0.4 US cents per share, but that is literally like peanuts compared to historic dividends for this company. Look at this table, right? In FY22, there was 26 cents per share paid in dividends total for the year. In FY23, there was 8.1 cents per share. So, a 0.4 cent for half a year is pretty out of whack.
I think it totals a bit over $50 million.
Yeah, it's just it's doing a dividend for the sake of a dividend, but it's not real money. Yeah. Unfortunately, though, my compliments to management end there because the biggest talking point I've saved for last, and it's a massive head scratcher that led me down a pretty giant rabbit hole.
That it did. There was some bloody hitting that keyboard like a possessed man today.
This, of course, like you said, Matty, is the decision to announce, investment approval or final investment decision for Hermosa's Taylor deposit. And if you haven't been paying attention to South32, I don't blame you, but their exciting development project is Hermosa in Arizona there. I remember when they put a big presentation out last year on this project. There's lots of slides and numbers. Do you remember that one, JD?
We spoke about it at the time.
Yeah, we flicked through it and we loved all the pictures and the discussion and everything like that, but there was no NPV IRR. And those were the numbers that we wanted to know about this.
And I wonder why they didn't show them.
Because it was South32, mate. Well, now we have those numbers today, and we also have an investment approval by the board to develop Hermosa Taylor deposit. But, and it's a big but, the numbers look like dog shit to me. I'm going to read them out to you, and I want you guys to tell me if this is the kind of project that we would expect to be financed. Pre-production CapEx, US $2.2 billion. NPV with a 7% discount rate, US $686 million. IRR, 12%.
So I think the old golden rule, you'd hope the NPV is higher than the CapEx usually. I know some of the big projects that your BHPs and Rios don't mind a low IRR if it's a long life project, but this isn't one of those.
Yeah, it will have it will have a long life, and you'll get all this optionality, and you can use the infrastructure for years and years from expansion.
But it's not Acadia or a friggin' OU Tolgoi or anything.
Yeah.
Right.
The numbers aren't pretty on the surface, and having also listened to the call, I'm sure you'll go into the commodity assumptions behind it, but there's another detail which I'm sure you'll also touch on. The sunk capital in here was significant, and it's no secret, like a lot of the analysts were asking questions about the decision to go ahead here and what were the other options management had. Yeah, and I'm seriously, like those numbers, right? Like we talk about like shitcos with metrics like that in their feasibility studies all the time, and our commentary is it will never get financed. This project is not financeable.
And be aware that South32 have already spent about over $2 billion in acquiring the asset and work they've done already. So
already sunk $2 billion. Yep. And so that
US as well.
US.
That 12% IRR excludes sunk capital already. So
So and we're going to get into the zinc price assumption as well.
Exactly. It gets worse, right? Oldest trick in the book, commodity price forecasts seem bloody optimistic compared to consensus. JD, we were listening to the analysts on the call and they were asking all the right questions, and we're looking at the numbers, scratching our head. I can tell that the analysts on the call are clearly scratching their head too, because the numbers didn't really stack up. And because something didn't stack up, I spent the entire call trawling through the management incentives to see if I could explain the decision from there. Meanwhile, the call is underway. So let's play a few of the hard-hitting questions just for the money miners so they can get some insight here. First one is from Lyndon Fagan.
Graham, I was just hoping to push a little further on just the Hermosa approval generally. I mean, I guess we've spent over $2 billion to this point. We need another $2.1 billion. We've got zinc needing to rally 40% from spot just to get to the feasibility assumption. And even with that, we're only at a 12% IRR and an MPV half the CapEx. So I'm just sort of looking at it going, it feels tough. Why not hit the pause button, and why not do a buyback where you've got a stock price that's been floundering, and surely the returns on a buyback look pretty good?
Look, I think your question around, and the other thing we'll always come back to at Taylor, we won't shy away from the fact that we bought this. When we bought it, what have we been sort of hurt by? 2 years delay on COVID, 2 years delay, if you like, on dewatering, high costs. If you ask me the question, would I go out and buy the asset again? Absolutely, every single day of the week.
That answer, I would buy it again. Very interesting. I'm not sure I would. Next one is from Glenn at Barrenjoey.
Good, thanks. I can't help but feel that Hermosa's your Jansen a little bit. Just with it, I mean, you've talked a lot, 12% return, higher zinc price, but, you know, clearly you've got lots of options at Hermosa that will come through potentially, plus any benefits from the government. To give me some comfort and I guess the market, you know, like that 12% return, what does that potentially look like? I mean, I'm sure when you discussed it at the board, you said, well, if we can get the two deposits up plus government assistance, what does 12% potentially look like, you know, in the future?
Yeah, so maybe if I'll slightly take that in a different direction, Glenn, and then we can come back to your question. One, I'd say, look, I won't take the Jansen question because I think they are fairly different. But I would actually say what I'd like to think Taylor would be our Cannington.
And to wrap it up, we've got Lachlan Shaw at UBS on the zinc price there.
So just to come back to the 12% IRR, just around some of the assumptions. So I know you're using $145 a pound long-term zinc. Consensus is roughly $120 a pound.
Yep.
Maybe just give us a bit more insight around that, please.
Yeah, look, absolutely. Look, when it comes to the pricing, obviously the zinc price is something we've had a strong position on zinc price for a period of time. I don't think we're the only ones in the industry. So if you look at some of the other major zinc producers, one of them being a trader, another one being a large producer in North America, you know, they would actually have a very similar long-term zinc price to ours. Consensus pricing is always interesting because when you look at the consensus pricing, the reality is there isn't as much coverage on zinc as there is like copper. If you pick out a couple of people who probably do a bit more detail on that, you actually do see that their long-term price is very similar to ours. If you look at the industry benchmark, for example, of Wood Mackenzie, if you look at when they use an inducement price that they need to sort of deliver new projects to meet that, if you like, supply gap, supply-demand gap that exists, they have a very similar price to ours as well. So I think for the people who've done a fair bit of work on the zinc side, we're probably in the ballpark of what most people are seeing for pricing around that.
So look, I can't help myself but have to fact check that response immediately, right? The quote there is not out of the ballpark. Not out of the ballpark on the zinc price if you check the analyst. So we see here that South 32's long-term zinc price assumption is US $3,207 per tonne. It's important to note that number is expressed in real 2023 dollars, so you remove inflation from
Okay, so they're not saying that that's going to be the price in after FY31 when it's gone.
Correct. Yeah, it's like throw inflation on top of that and you'll So I opened the latest consensus economics commodity price forecast for zinc to see what the ballpark looks like. And it is in fact out of the ballpark. Consensus is US $2,480 per tonne. But that's the average, right? So maybe some of the constituents are up there with South 32. Well, I've charted them up on just this histogram here. So you can see for yourself there. There's 11 investment banks or macro forecasters that have all kind of contributed, or their estimates have been put into the survey here. And literally of those 11, picked the highest one of the entire lot, and South 32's long-term estimate is still 15% higher than that. So, like, to me, that is literally the definition of out of the ballpark.
And they pointed out that it's not a commodity that is forecast to a great degree. I remember Graham saying that was one of his reasons in supporting and answering one of the questions we just played.
They're bullish zinc. There's no doubt. They think they've done a lot of work on the market. They think they understand it better than everyone else. And heck, mate, maybe that's true, but I would not feel comfortable making FID based on that sort of assumption, because history is riddled with companies that think they've done more work than everyone else on a commodity price forecast, and they get it wrong.
Yeah, it's absolutely a bet. That's just what kept coming back to my mind. They are betting on, and being very bullish on this commodity price.
Maybe the lead will go up. Maybe the lead will save them, or the silver.
And what they really speak to is getting the optionality that comes from access to this Clark deposit, where you've got manganese that can feed the batteries, but they've got to do a lot of work on actually incentivizing demand for that in the US, and et cetera, et cetera. So, like, I think there was a quote that could be worth zero, or it could be our most valuable asset. We don't quite know yet. But
that was an outstanding quote.
Yeah, totally. And look, like, the optionality is true. Like, you get that from a long life asset. Potential government assistance can, of course, improve the IRR, and they definitely spoke to that. But Jesus, like, I struggle, like, I really struggle to comprehend like these sort of numbers for a big miner to say, yep, this is the most efficient use of our capital right now. Yeah,
and as you said, it's a bet to build it now, like, because they're like, well, it's going to obviously take a long time to build. So it's, if they're really hoping that there's going to be a big bloody turnaround in all these prices and things are going to change. So
second half,
you can't just bloody make this in 2 years.
Second half 27 is when they wanted it to first come online from memory.
Yeah. And like, I can't help but get cynical about this, fellas. Like, I'm surely, we're not smarter than South 32. These are actually intelligent people, but I'm staring at a turd, and these intelligent people are trying to convince me that it's not a turd. So I remember Munger's advice, show me the incentives and I'll show you the outcome. I convinced myself that there are some poorly aligned incentives informing this decision, and I start digging. Disclaimer, I didn't find a smoking gun, but
I'm glad you didn't make one up, but you usually try and make one back in the early days. I will find something.
There's always a bit of dirt.
I have some questions worth raising. I'm looking for a short-term incentive potentially tied to FID at Hermosa's Taylor. And to start with, like, let's look at the STI's short-term incentives. You can see that these are awarded based on a business scorecard outcomes with a business modifier applied to them. Now, we can see here that 7.5% of South 32's business scorecard is tied directly to Hermosa, but I can't deduce any more than this wording from the annual report. It says, in quotation marks, delivery of key Hermosa project outcomes. And my question was, what does this mean? Does that mean FID? If so, like, are you potentially incentivizing FID when it might not be the best allocation of capital? And you can actually pick up some clues when you look at how that scorecard was rated for the prior year's short-term incentives. There was a pat on the back for Taylor Deposits study work completed last year. Oh, great, we did good on that strategic priority at Hermosa. But remember the modifier that needed to be applied. So there was actually a business modifier applied to that scorecard last year, and the board wasn't impressed with the impairment expense to Taylor Deposit. And so they whacked the CEO with a modifying factor of negative 20%. Naughty. So,
as in the CEO was naughty?
No.
Because he got whacked by it?
The impairment expense. It was it cut down his short-term incentives. Anyway, so from those short-term incentives, I can deduce that potentially some of the FY24 STIs are tied to milestones at Hermosa, which originally I thought could be FID, but South 32 responded to my question on this one, and they said FID wasn't a part of it. And B, there is precedent for the board deducting your bonus if there are any more write-downs to Hermosa. We don't want that. Now, look, that's just STIs, right? In the scheme of things, the STI number is actually pretty damn small compared to the LTIs. What do you reckon LTI stands for?
Well, it used to be long-term injury rate. That's what they call it on mining, but long-term incentives.
There we go.
Which I assume are the big ones.
Exactly, mate. Take these two tables, for example. You can see the numbers there in the first table. They're for the STIs, or the short-term ones. And then the second table there, those are the number of rights you get under the long-term incentive plan at South 32. These all relate to the rights for the CEO there, Graham Kerr. And they're just completely different magnitude, like completely different ballpark there. I mean, in some cases they're literally like 10 times more rights in the LTI column than the STI column. But both the LTIs and the STIs, the way they work is they will all vest to one South 32 share if the terms are met, etc. The catch is if LTIs work a bit differently. They get issued, but performance is measured 4 years from the time they issued because they're long term. Now, at the end of this financial year, the CEO Graham Kerr, his performance will be measured for the rights issued all the way back in financial year 2019, because they basically measure it from the 1st of July 2020 all the way through to 30th of June 2024, i.e. in just 3.5 months' time. And if you look at that chunk there that were issued in FY19, that's the biggest chunk in that column. That's like, if you just look at all of those LTIs there, there's one tranche which is just bloody bigger than all the rest, and it's that one there. Sorry, I said FY19, but I meant FY21. They're bigger than the rest, right? 2.695 million there. Just bloody, a massive number of LTIs there. So let's take a look at how that tranche of long-term incentives is actually going to be measured. The question is, they're going to vest? What does the CEO Graham Kerr actually need to achieve? And there's only two components to that big tranche of LTIs there that could vest. 2/3 of them will vest if South 32's total shareholder return outperforms there's a global mining index over that period of 4 years, and 1/3 of them will vest if South 32's total shareholder return outperforms the MSCI World Index over those 4 years.
So how's it tracking at the moment to those indexes?
I had to check, mate, and you see right there, mate. I've plotted them up for the from the start date, and the purple line there is South 32. And look at that.
Going good in 2022. She was looking a sure thing.
I know, they're on track. So total shareholder return to date is from that starting point is 76% versus MSCI at 57% versus global mining index at 53%. And keep in mind, right, the last 4 years of LTIs did not vest. Like, go back to that table and you'll see all the way FY17, like the amount that actually vested 0, 0, 0, 0 for the last 4 years. And now he's finally coming up to a tranche and he's on track. Looks like they're going to vest payday.
Yeah.
Because it's such a binary outcome, the way they were structured. Will they vest or will they not? So to be clear, like, I'm not entirely sure if there's a direct read through here connecting the decision at Hermosa to the incentives after doing this deep dive, but I found the exercise interesting nonetheless.
So could we say that, right, they need the share price to not go down?
Yeah, I would say that
it's approaching that point,
I would say that. Yeah.
Yeah, and I know you mentioned. Have you mentioned yet about they stopped the buybacks?
Yep. Yeah.
Yeah. So I think we said before, if they did, instead of doing this, did do buybacks, and then you went down this rabbit hole, you're like, right, that actually looks like they're trying to get the share price up to reach these incentives, but actually announcing FID on a project that doesn't appear to cut the mustard with these prices actually looks like, well, that's something that could probably make the share price go down.
Well, the reality of the influence that their buyback was having as a percentage of total volume, I think, was pretty small. Like, it's a big liquid stock, right? The buyback doesn't really, at the margin, make a big difference on the flows of the day, I don't think. But
that is the existing buyback program that was in place. If what you're putting forward is that the capital that's going to be allocated toward Hermosa
was used to buy back the stock,
that could have been a significant amount of capital.
Yeah. The way I look at the incentive structure and everything is, in 3.5 months' time, the CEO is either going to get $10 million of stock or not. And it's a pretty binary thing whether or not that purple line stays above those other two lines. And yeah, so there's a pretty big motivator to not let the the company derate and not to have negative surprises to the downside and things like that. So, if anything, I wonder if there will be any negative surprises to surface after June 30 this year, after the measurement period. But it's worth pointing out that the LTI vesting conditions, they actually changed after that big tranche was issued in FY21. Now, 20% from that point on, the LTI is issued, 20% vest according to strategic measures, which includes increasing exposure to medicals critical for a low carbon future. So I don't know what to make of all this, gents.
Do you think they have to? This has to show that they've got a growth plan without it doing any inorganic growth acquisitions or anything like that?
Yeah,
every mining company has to.
Yeah, because
absolutely.
Without this, it's like, right, I think you said before, what is South 32 in the previous episode?
I think to the point on, whether pressing go on Hermosa and how that's sort of linked to his incentives, I think you could almost give them the benefit of the doubt. I think if you're thinking internally in the company, you're going to show to the market a project with an IRR of 12%, a CapEx of 3 times the NPV. I don't think you're necessarily thinking this is going to set the market alight and this is going to really help me get my incentives. The other a bit more ominous point you make about potentially things being hidden and coming out post end of financial year is another point that we won't know about for the next 6 months. That could be a detail, but
they were relatively positive on the nickel project, which we were pretty nervous about. Things like that might be a negative surprise.
Yeah, although it did say that has a carrying value of 400 million, which is for a $14 billion company. And I mean, one other point to the company's positive is that they spent a long time answering analyst questions. A lot of analysts got a second go around and got asked more questions, so they were at least responsive on that front, which was good to see.
Oh, that's what South 32 was created for, so BHP didn't have to talk about it.
and I echo your sentiment, JD. Like, I think they've had pretty solid management for its journey when it comes to capital management. The portfolio stuff has always baffled me, like trying to become a bloody battery metals company or whatever. Like, you're South 32, you're not IGO. Embrace it. And this FID decision, it's a turd. If I'm wrong in 20 years, so help me, but those numbers stink like turd. They put sprinkles on top, but it's still a turd.
I think you're dead right. The first thing I think we both thought is, what are the incentives when they press go on this? And the last comment I'd make on the company is looking at the margins across all the assets, you can very much see it's a company with a portfolio of high cost, lower quality assets. The margins on every single project were coming down. Even the Met Coal project, which was still the money maker, they were coming down. You can see this is a company that, say, 2 out of the 10 years in the commodity cycle makes a substantial amount of money, and then they need to just tread water really and try and make a little bit of capital and keep the assets going.
Yep. All right, boys. Wesfarmers, not something you would ever think you'd talk about for mining, but we do now. Comments on Mt Holland finally, their JV with SQM, also known as Covalent Lithium. What's going on, Jonas Benedict?
Well, they had a lot of coal assets for a long time, but they don't talk about that since they've sold all of them. But on Mt Holland, they said they have successfully commissioned the concentrator at Mt Holland. They've also increased the offtake that they have with LG Energy. So not a massive amount, 50,000 tonnes of spodumene concentrate. Here was another quote that stood out. Sales volumes will be dependent on commercial factors, including the prevailing spot price, but at current price sales will not contribute positive earnings during the FY24 year. So obviously wouldn't expect positive earnings given they're in the ramp-up phase, but that other line really stood out to me. That sounds like they could be contemplating stockpiling product straight away. Maybe I'm reading into it a bit too much, and the hydroxide plant didn't get an awful lot of airtime in the report, but it would be very interesting to see if they can glean anything from the disaster that's been Kwinana and IGO. And I mean, maybe we'll get a bit more colour on that in the next few weeks, but hopefully there are lessons they can learn so they don't walk down the same path that IGO did.
Yeah, it's one of those facilities that just doesn't get any airtime, and probably a lot of people don't even know it's happening. So like they're pretty much building what IGO and Tianchi have done at Kwinana, downstream hydroxide plant. SQM and Wesfarmers are doing the same thing, and I think it's due mid-2025. think.
Yeah, I'm not sure of the exact date.
From memory. It did get pushed back about 6 months or so, but that is happening. You just don't hear much about it. So
Absolutely. Very keen to see how that plays out.
all right, Whitehaven, down 7% on the half-year results, lads. What's going on?
So cash generated from operations, 530 million. This is down 80% versus the same period a year ago. And just like South32, I think it's pretty reflective of where they are in the cycle. 90% of sales are from thermal, but as of April 2nd, when the transaction closes, there's going to be a significant change to that. So they have net cash of 1.5 billion, plus they've agreed terms to a US 1.1 billion credit facility. US 2 billion needs to go to BHP, like I mentioned, on April 2nd. So I'll get into that, how that balance sheet's looking more soon. They are paying a 7 cent per share interim dividend, so that's a bit over $50 million, post the half year, and during the half year, 330 odd million went out the door in the form of dividends as well.
So why? Yeah, obviously a big change because they were just printing money for so bloody long. Why was the cash flow down so much?
Yeah, I'll break it down in terms of price received, costs, and production. So on price, this half year they realised a price that was Aussie $220 a tonne. Compare that to $550 a tonne in the same period a year ago. So that's down 60%. That's pretty massive. And then on cost, they were up $15 a tonne to 111, so roughly a 15% increase. Now, this was a result of lower production and sales out of Narrabri. They try to blame this in the presentation on labour costs. They try to infer that, but if you actually dig through the report, you can see that what's going on at Narrabri is actually the real driver behind that cost increase.
Bloody New South Wales miners, they get paid bugger all compared to West Australia. Shouldn't be a labour problem there.
Yeah, it's very much their own making, I think, in that case. And just on sales volume, Maddie, that was up a few percent. Their portion of it was about 6.8 million tonnes. So after accounting for investments, that's what they put into the ground for the assets, plus the $100 million deposit, that US $100 million deposit, that equals 360 million. So if you take that off what they earned from the assets, $160 million was produced. So kind of like what we spoke about yesterday, Trav, with Evolution, it's interesting to see they still distributed $340 million to shareholders. All these companies are very much fixated on how they appear to the market and continuing those returns.
So, and that's when you talk about that rating, because they trade on 1 times earnings or something, don't they? These coal stocks, so they have to pay the big dividends to.
Yeah, Whitehaven's a bit more. Yeah, and buybacks is the other method. Whitehaven traded a bit more of a multiple than some of the others with substantial foreign ownership and whatnot. But yeah, you're right.
So what's happening on the Blackwater Daunia acquisition? What's happening? What's the status there?
So the main thing I was looking out for was whether they'd managed to sell down 20% stake in Blackwater. They'd said a long time ago when the acquisition was first announced that they're trying to do this, most likely to a steelmaking company. They still haven't done it yet, but they got net cash of $1.5 billion. They've got the US $1.1 billion coming in the door, that facility. There is another US 200.
So is that $1.5 billion Aussie?
US debt facility.
The net cash.
That's Aussie.
Yeah. Okay. So US $1 billion then. But US 1.1 will go out, will come in the door.
Yeah, and then they've got to pay $2 billion out the door for the assets, plus US 275 for stamp duty and transaction costs, which they keep very quiet about. That leaves them roughly right now a bit shy of what they need. Hence, I think they're definitely going to try and sell in the next 2 months that 20% interest. And bearing in mind they will generate a bit more cash from the end of December until April when the deal closes. And like South32, they do talk about the share buyback. So this remains on hold since they announced the transaction, which is, very logical in my opinion. But I think you could call into question the buybacks and how they went about that. There was a lot of criticism, which we spoke about at the time, but they kept buying all the way up to $10 a share. And now knowing that the company was very much considering investing billions of dollars in assets, it seems a bit funny that you'd buy the stock when your commodity is at cyclical highs and you're thinking of investing a shitload into new mines. Just calls that into question. It seems a bit short-sighted in my opinion.
Well, we'll see in 5 years' time, mate. And if met coal divergence from thermal coal sort of maintains that where it is, they'll look clever.
Yeah, absolutely.
You never know, South 32 might look clever in 5 years. Who knows?
Yeah.
Will we still here?
Yeah.
Maybe. Oh,
Yeah.
Hopefully I'm gone by then. Right, boys, let's head over to South America. One place I'm not allowed to go on holidays, Capstone Copper.
Capstone Copper. So they raised a bit of cash to fund growth in their Chilean assets. They're a TSX listed company. This is what the Canadians call a bought deal, which more or less means it's underwritten. So they're capped at $4.5 billion roughly. And they've got a newly listed CDI here, which doesn't seem to be trading much on the ASX. So it was a bit of a funky deal. They saw a sell down from one of their shareholders of roughly $75 million worth, and they issued roughly $350 million worth of new stock. So they're just trying to grow the assets Monteverde and Santo Domingo in Chile, like I said. And why it really stood out to me is that there is very much interest for good copper assets. And it's also one of the biggest raises we've seen in the mining space, even though it's not in Australia, but one of the biggest raises we've seen in quite a while.
Yeah, right. Well, let's pump a bit of a rapid fire.
Let's do it.
Bloody bit of news, but there's always a bit more. You never know, mate. Kin and PNX. So Kin, as we know, are sitting nice and pretty after selling off some of their gold deposits at their Cardinia project to Genesis. So they got cash and liquid assets of $75 based on, I think, if Genesis's share price is $1.52. Now they've issued a non-binding and indicative offer to PNX Metals in relation to a potential merger. Now, let's just have a look.
Oh, before you go there, Matty, this was the exact same playbook as we talked about yesterday with the share price moving,
Hammer and Carnaby,
and company and trading halt, and then responding to ASX query, speeding ticket, and then merger discussions.
Yeah,
exact same playbook.
Non-binding, indicative.
Yeah.
We've got some friends of the show on the board here.
Yeah. So have a look. So I'll pluck two random directors out of Kin. Rowan Johnston, Executive Chairman, and Hans Plagemars, who is Delphi, as we know. But
Delphi, is it Sparta AG? Is it, there's so many different names it goes by.
It's like Delphi Deutsche Bellaton.
There's like three names. But
anyway, he's that guy. That's on the Kin side. And now they're in discussions with PNX. Let's have a look at the PNX board. Non-Executive Director, Hans Plagemars, and Non-Executive Director, Rowan Johnston.
What a bloody dynamic duo, mate.
What a bloody coincidence.
I think have you seen them on boards before together?
Well, you might even look at the great WMC, the modern not great WMC, Walluna Mining. Board of Directors, Rowan Johnston, Interim Chair, Hans Plagemars, Non-Executive Director. Oh, jeez. Oh, okay, I found another one. Geo-Pacific Resources Limited, Rowan Johnston and Hans Plagemars. And last but not least, Money Miners, Spartan. Rowan Johnston, Non-Executive Chair, and Hans Plagemars, Non-Executive Director. Oh, do you reckon they know? I think they might. They must catch up or something. They probably spend that much time together in all the board meetings. They pretty much may as well save on rent and share a house. So
there's not enough, quality directors to go around, mate. So it's probably just coincidence.
It's
just coincidence.
And you're seeing, I think I saw on one of them. If you look at Geo Pacific, Rowan Johnson, independent, non-executive director.
I put that question to him at the Spartan AGM. I don't know if you remember that. I remember
it vividly.
Pointed out this observation that he happens to share a board and calls himself independent, despite sharing a board with Hans on a lot of other companies, and a lot of those companies also happen to have Delphi as a big shareholder. I don't think he appreciated the question.
No. Well, there was no pat on the backs. Right, now, Ora Banda, Riverina update come out. Ramp-up's on schedule. They chucked 16,500 tonne of development ore through the mill at 2.74 grams per tonne. So if they control their dilution once they start stoping, they're hoping this grade will double. So, 4.5 metre wide development drive. That width goes down to, they're anticipating 2.2 for the stoping width. So year one maths should double the grade. So first stoping ore scheduled in March. Commercial production to be achieved in June quarter. So they're looking to pump out about nearly 7,000 ounces per month. So yeah, after the quarterly came out, once we went through it, it looked like they'll hopefully avoid having to do a capital raise to get them through, because they've still got that 16 mil coming through the door from Wesfarmers by 30th of April. Ended last quarter with $19 in the bank. But I'll tell you what a sensationally timed deal with Wesfarmers when lithium was popular, because it sure ain't now, and I couldn't see a deal like that happening, divesting these lithium rights in this current market. So I reckon that deal has bloody saved them.
Credit to them for that one.
Yeah, well done.
True North, Matty, what's going on there?
True North. Oh, ding, ding, ding. I still got some bloody baggies here. Cloncurry restart plan release. So mining to commence at Wallace North soon. So this is up in the district in North Queensland that we're going to go through next week. One of the many copper players in that Cloncurry Mount Isa region. So look, $82.2 they've got to put in for pre-production and working capital. A lot of existing infrastructure. They're saying $111 for 4.6 years of free cash flow. So Glencore recently took all the offtake for it, but the ore will be concentrated via toll treating at Evolution's Ernest Henry processing plant, and then it will be downstream processed by Glencore at the Mount Isa smelter. So they're still awaiting the resource for their other project, the Mount Oxide. That looks, so the headline drill hole there is 66.5 metres at 4.95% copper. So interesting to see if that one gets turned into a mine or not.
I couldn't see how Glencore getting 100% of the life of mine offtake was a positive thing. Yeah, that I remember the stock went up like 50% on the day on that news. And I was like, how is that good news? Like Glencore gonna bloody
got them by the balls.
Yeah, well, that's what they do. Anyway, I'd love to see them just not mine that and just drill the shit out of Mount Oxide. That would be awesome. But that's just my view. What would you think on that one, Matty?
Oh, who knows? What would the market like to see? Because until there is a catalyst, a global catalyst to get copper price up, which you would anticipate to be interest rates lowering, we're not really, copper's just doing its thing. It just doesn't seem that this supply deficit and lowering of copper stockpiles is the thing that really moves the needle on copper. It's more a global growth catalyst that is needed first. So there's all different views around there. Depends who's, and those views are dependent on how much copper stocks they own usually. But we're waiting on that. So whether it's going to be the perfect storm that's been talked about for many, many years now, we're yet to see it happen. So what would you do, Trav?
Oh, mate, I'll keep projecting copper supply deficit every single year for the next 25 years, so we can keep talking.
If they can make free cash flow from this Cloncurry restart at these copper prices, and that can also go into funding exploration of Mount Oxide, I think that's a good decision.
Everyone wants to do that, but I think what we've seen with performance today with this company is they've done small scale mining funded with debt, which has then worked out to have negative cash flow, which has then had to be solved via equity and dilutes everyone in the process. If you just raised equity in the first place, didn't try and do your exploration funded via cash flow, because you can really cook yourself if debt's involved, and then equity has to save it.
And that's what's happened to them. They IPO'd at 25 cents. They're now down in the 8s. They've been low as 6. So they raised money at 12, which is why I've got the shares. So it would have been, should have just bought them at bloody 6. Anyway.
Oh, well, Matty.
Oh, well, just got to keep those brokers happy, give them that bloody 2% every now and then. They're all good fellas. Mate, thanks to all the bloody partners. Love them all. Great show. Good bloody deep dive, Trav. Love your work, mate. Mate, VRIFY, we've got the VRIFY drinks Friday. Any companies that want to come, flick us an RSVP or I'll send you the link. It's in the Monday show notes. I could probably put them in these ones too. I'll do that for VRIFY. They give us a bit of cash. So, mate, and also if you just want general information, give grant@verify.com a bloody email with no E. Mate, InvestorHub, rhori at InvestorHub.com if you want more info. DSI, underground. Mate, SMEC Power and Technology and Anytime Exploration, the full tick services, except for the Crossford doesn't provide shit service. Mate, McMahon Mining Title Services. Any said them already. KCA Site Services, Brooks Airways, and K-Drill. I've even put Ryan O'Sullivan's email address in there.
There you go.
It was on the website. Not my fault. Hoodaroo, money miners.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.